So the latest filing is out for quarter two, and Michael Burry has sold 99% of his hedge fund portfolio. So why has he done this? I'm Working Day Trader, and welcome to my channel, and we're going to try and find out. So who is Michael Burry? Michael Burry is a famous hedge fund manager of Scion Asset Management. He's famous from the film that was and the book that was wrote about him called The Big Short. You probably have seen it out there. Christian Bale played him in the film if you want to go and check it out if you haven't seen it. What he did back then is he profited from the US subprime mortgage crisis by shortening the mortgage bond market, basically. It took a while and people thought it was crazy, but he foresaw before many other people did that it was just rubbish, and he came out and he made a lot of money out of doing this. Before we carry on as well, if I could really ask you to give me a like on that button, so hit the like button. If you're not subscribed already, then please subscribe. It really will help my channel. And I'd really be keen for you to comment down below on your opinion on why he's done this, what you think of the market, etc, etc. Really put your thoughts down there, because I expect you guys have got some great thoughts on this stuff. So if we look at Burry's portfolio, latest filing of his portfolio, we can see there's some really big names of all the stocks that he's did hold in quarter one, and now in quarter two he's sold them all. Some real big names in there. If we look at like Bristol Myers Squibb, Booking, Warner Brothers, Alphabet, Meta, he's completely sold them all, which is a massive surprise. He's gone definitely different to a lot of other big hedge managers out there, by selling all his positions other than one stock which he bought. If we then move on to looking at the value of his portfolio in quarter one, it was his portfolio was worth $165 million, and now it's just worth $3 million. So what is going on here? It's this very strange behavior. Is it that he knows something that we all don't? Let's dig into it and find out. So let's look at some of the reasons why Michael Burry has made these decisions to sell nearly all his portfolio. And if we look at things like Twitter, where he talks quite a lot on there, he's been calling for quite a while now, most of this year, that the stocks are overpriced. There's bubbles forming. There's a lot of silliness going on in the market by people, especially like retail investors. He says a lot of silliness in the market, and it's way overpriced, and bubbles are forming, etc. Then he goes on in a different tweets talking about there have been market rallies in the past that have eclipsed the 50% retracement from the lows, and it's led to lower lows afterwards. So the market has gone up 50% from which we all thought was the bottom, but then it's come collapsing back down again after 50% retracement over a period of time, which is quite worrying. He's got another tweet saying that people saying because the Nasdaq is now in a bull market because it's now gone up 20% from the low it was. It's gone up 20%, and people are like, yeah, this is a bull market. We're in a bull market now. And he's saying that after 2000, the Nasdaq did that 7 times as it fell 78% to its 2002 low. So he's putting out a lot of warnings out there that this, let's not get carried away. And he's seeing things that are gonna, just because we're having these rallies upwards, these bull market raises, these bull market rallies, that don't count your chickens yet, because it's done it many times in the past. He's talking about past events in history where it's done similar things. He's done lots and lots of tweets about different things and examples he's used at different times in the past years. And he's only saying with different things that maybe because we're only about halfway, and the stock market can still go down another halfway. That's just what he's talking about at the moment. So he's putting out lots and lots of warnings about he believes the market is going to go back down again and go down further and deeper than it has already. I don't know personally. When I look at the S&P 500 at the moment, in the short term, we are in an upward trend. Short term, we've been making sort of higher highs and lower lows. So the short term trend at the moment is an upward trend. Not saying that it might not plummet back down. He could well be right. He's pointing out lots of different charts as well, like the Cape ratio, that the stock market is overpriced. I mean, he's talking about like if you look at the current Cape ratio is 28 and it should be nearer the average of 18, which is showing that it's overpriced. He's talking about there's a massive credit card debt already building up before we're getting into the end of the year, the Christmas season. And with all this sort of recession stuff going on, he's talking about obviously it's going to be a massive squeeze on earnings as people are not spending so much, etc. So who knows? I mean, like I say, he's made big calls in the past, and could this be another big call that he's making? I don't know if this is correct or not. There's lots of other big asset managers out there, hedge funds managers, and people saying that the signs are good and that we're going to be going up in well. I mean, quite recently, the inflation in the US turned a corner and started to go back down, only slightly, but it did. And you look at other things like the unemployment rate, again, is quite low, which even in the UK and the US, both the unemployment rates are really low, so people are in jobs. So it's an interesting time. I'm not sure which way it's going to go, but I just thought it was fascinating when you look at these experts and what they've done, and he's totally gone out of the pact with the way he's going and how he sees the future. So, like I say, that's my view on it, and that's what my reporting on it. So let me know what you think, and hope you enjoyed this video, and remember to like the video. Okay, speak to you soon.